Welcome to Grow For It. It's a podcast for small business owners, managers, and professionals. The goal is to give me a chance to work with the space between your ears, on your mindset, to help you focus on the things that really matter to your success. I want to enable you to concentrate on pursuing your vision, setting meaningful goals, and engaging in the day-to-day activities that will have the biggest impact. Thanks for joining me. All right, well, welcome back. Today I've got two old friends here in the office. This is Wendy and Alan Hall with the Alan Hall Agency here in Louisville, Kentucky. Guys, welcome back.
Thank you.
Thanks. Good to be back.
Absolutely. And the reason I say welcome back, for those of you who don't know, I had a small business radio show here in Louisville back in 2018, and you guys were my guests back in June. Can you believe it's been that long? It's been 2 years ago, I guess it was.
It's been a while.
It's been a little while, but you guys did a great job, and I'm just glad to have you guys back. We keep in touch, on the phone, and we keep in touch online from time to time on different things. And you guys recently have kind of gone through a little bit of a business transition. I thought that would be an interesting conversation to have. So why don't we do this? Why don't we let everybody kind of know what you all do, and then we'll kind of step into it. And we actually have a common friend, Steve King and Victor Meyerowitz from MKCPAs right here next door. And that's how we all met. But Steve's done great work for me. I've had him on the show before. We've talked a number of times. And he had some helpful advice for you guys starting out as well.
Yes.
So let's back up. You guys started in about 2013, is that right?
That's right. Yep. I had my department was eliminated at a national health insurance company. And so that was a catalyst for me to hang up my shingle and, start the agency.
And what types of insurance do you primarily deal with?
Our primary focus is Medicare and health, and then personal home and auto.
Okay, and you guys have been real helpful. I mean, I started my business, I was really kind of got it off the ground in this office. Is when it really started flying. And you guys were real helpful, just general advice. And hey, I'm thinking about this. What do you think? And you guys are always so daggone helpful. I've had friends come into you and talk with you guys and have always gotten great feedback. So again, I really appreciate what you guys do. From just the advice you're willing to give, the time you're willing to spend with people. And it's nice to have friends that are kind of in the business and kind of get it. But at the same time, you guys are also entrepreneurs. You're also, here, like the rest of us, just trying to figure out how to make it all work. This has not been the most gentle of years in terms of trying to run a business. How are things going for you guys?
Overall, they're going great. We had made a decision to, we were kind of cohabitating office space, so we made the decision to get our own spot, get a first floor place, and just move right down the street, about 8 minutes down the street from where we were. But we made that decision right before COVID-19 happened. But honestly, it hasn't really affected, anything as far as that's concerned. But, overall, it's been good, been going well.
Well, that's, you hear so many stories about businesses struggling, businesses really, some of them going out due to this pandemic. And here you guys, you bought a commercial property. You guys, kind of transitioned the business. I kind of did the same thing. I closed on this office not too long ago. So it's, if you've got a good business plan, if you're really thinking through the numbers, if you're looking at your business core fundamentals, there's still opportunity out there. And really that you guys have seen that over the last several months as I've kind of followed you on Facebook and LinkedIn and places like that, where you kind of talk about, hey, here's some interesting things going on. And I thought that might be an interesting thing from a small business owner, to kind of get your perspectives on what you all are seeing in the marketplace and what really prompted you guys to kind of reevaluate and to move in a slightly different direction, but actually move forward, and not only through the short term, but also for the long term.
Sure. The big thing and the heartbeat behind, one of the heartbeats behind us, moving to our own space was, I'm like, okay, we're going to go in there. We already do health and Medicare. We do it well. We do personal home and auto. We do it well. We're going to do everything. We're going to start doing all these business policies. We're going to start doing, all these other lines of insurance that we could do, but we never had really done them on a regular basis. You know what I mean? And I'm like, that being said, we could get the case done, but it might take us 2 days or, or right. Whatever. So,
is it radically that different? I mean, I guess there are more factors to consider in a business policy versus a personal policy.
There are tons more things to consider when you're talking about a business policy versus, a monoline auto policy.
Right.
So many more questions to ask, so much more paperwork, and just details to make sure that, the insured is going to be covered well. You don't want to just write a policy so somebody can fulfill a state requirement, because that's not the purpose of insurance, or it shouldn't be anyway. It's to make sure that if you had complete and total loss, that you're going to be restored to where you were or even better.
Right,
So
right.
too many times agents are quick to write something and they've not really researched it. And so if you do it properly, it takes some time.
And that's that because of that time length, or that length of time, I should say, it actually affects your guys' productivity. I mean, yes, that is a client you're working with, and you guys do a great job of working with clients. But at the same time, when you're trying to deal with a practice that is in some aspects volume based, taking a long time with one individual client sometimes slows you down on the rest of it. Now, you switch back over to the property casualty, the health. Is that a different process altogether?
It is, because it is it's quicker and it's simpler, not as detailed, but we already have the systems and processes in place. What I mean is, if somebody calls me for a quote on a Medicare plan, I mean, as soon as they tell me their zip code and county, I know the top 3 to quote them, what it looks like, what it covers, what the copay is at the doctor or not immediately. You know what I mean? Just because
Right.
of doing it in volume and doing it all the time. The same if somebody calls us for a quote on, a home or an auto policy, because of Wendy's background and experience, she already knows, okay, in this zip code, these carriers are more than likely, going to be the most competitive. And obviously we do our due diligence, we run it, we quote it, we do everything. But because it's already there, we're set up for it, we feel like we can give the customers a higher level of service faster than on some of the other lines of insurance.
Well, and with this, are you starting to see, and maybe over the last several months, are you starting to see an influx of calls from people saying, look, I really got to reevaluate things because maybe my job situation has changed, or maybe other factors are coming in, to where they're really kind of coming back to you guys to say, hey, look, I need to either come to you guys as a new client, or I need to kind of look at my current coverage and see if I can scale it back or change it. Has that been part of the COVID pandemic impact for you all?
When it first started hitting back in March and April, and then when people realized, oh my goodness, I'm going to be out of work for 2 months or however long, but depending on your career, people were calling, and different carriers were setting up crisis hotlines.
Right,
To where
right.
if they couldn't pay their auto insurance premium, they would extend the deadline, and there weren't late fees. And, one carrier even took away if a payment got returned, there were no fees on that. So people were calling saying, hey, can we push that due date out a little bit? But as far as like reviewing coverages, that's something that we do for all of our clients at renewal anyway.
Right.
So it's very much part of our system anyway. So as people come up for renewal, they're like, hey, I think my premium's going up a little bit. Where can we scale back here, but still have good coverage? So people were concerned. I did have a few clients that maybe took liability only on a vehicle here or there.
Sure. It's a way to cost cut a little bit.
Yeah, just trying to save where they can. So
Now, you guys, with the Alan Hall agency, you guys are insurance brokers, correct? Do you want to talk about
Correct.
the difference between a brokerage and a captive agent real quick?
Sure. So as a broker, we have access to several carriers on the on the health and Medicare side. We have access to anybody who currently offers those policies. On the home and auto side, we have access to all the ones that will allow independent brokers, to write them. So,
So like a State Farm pretty much is a captive agent. It's only their people write State Farm coverage. Is that what?
That's correct. So like State Farm, Allstate, those guys, that's all they can write. Whereas what we do is, we get your information, we plug it into our rating system, and then we're able to, shop, multiple carriers, and then we usually pick the top 2 or 3, and then look through the nuances of that, and then put a proposal together for you. And we have the unique ability to leverage the competitive nature of insurance companies anyway to your advantage.
So again, not only can I price compare, but to your point, you're able to look at the nuances. Because again, buying on price is not always a good thing, especially when there's a gap that you may not realize that. Well, that's why the price is significantly lower. It's because they don't actually have the same coverage levels. Wendy, you've seen that.
Correct. Yeah, there have been times where even not just on the personal lines of things, but on commercial, where one time I reviewed somebody's coverage and they had $100,000 in business personal property, and they didn't even realize that they only had $100,000. And to a person who's in business, and this was more of a warehouse type thing, they needed $700,000 in property.
If you've got any kind of property or equipment or things like that, I mean, that inventory coverage, things like that, I mean, it can go through the roof.
I mean, it's ridiculous. And then that makes you wonder, okay, well, if they were lacking here, where else are they lacking? Do they even know what they have? Are you familiar with that? So when you're looking at, that comes to a huge part between reviewing personal lines and then reviewing commercial, because there are commercial ins and outs of, oh my lands, just all kinds of details. Yeah.
Well, and that's the thing. We have a mutual friend, Steve King, next door, who's a CPA with MK CPAs. And on his podcast, he did a series on, or a discussion on, the need for a mid-year assessment, to where at some point you need to sit down and look at what has changed. What did you expect, or what developed that you didn't expect? Because you're going to find gaps, but you're also going to find opportunities. Mm-hmm. And if you've gone through a substantial period of growth, perhaps, and you really haven't gone back to look at your insurance, be that personal or business or whatever, you may have some serious exposure there that you didn't anticipate. And it's just not something we think about all the time. Yeah, we go through the renewal process, but for a lot of us, it's kind of like, just, is the price roughly the same? Yeah, let's go.
Right.
And you fail to really take time to reassess what is actually going on with your business, and what has changed, and what are your needs now versus when you originally took out that policy. And I love the fact that you guys will actually sit down and do that thorough review with people. And especially on the health side, things change, and you guys are able to kind of look at, we can help you get a different price if that's what you're shopping for, but there's also coverage, and that difference from price to price, from carrier to carrier, is significant. And I think those are the things that I love having you guys as close friends, because I give you a quick call and say, hey, what do you think about this? And you guys kind of know this. It's your arena.
Well, and even when you're looking at like home and auto insurance, it is always wise to look over your policy coverages in detail. Look at them line by line, and if you don't know what one of the definitions of the coverage is, ask somebody. Ask your agent. Call us. Whatever you need to do. And there are a lot of times we feel like insurance companies get it over on us because we pay all these premiums and we never have to file a claim, or I've never had an accident and my insurance keeps going up. Okay, this is true, and this is life. And where it comes in with us, where we have so many carriers, we have some insureds that have been with us from the beginning, and 1 year they'll be with Travelers. Well, then the next year they renew. Okay, well, Safeco's better, so we switch them. Well, maybe when they renew again the next year, Travelers is better. So the insurance company within our agency may change, but we're the constant. So when I'm looking at somebody else's policy that's coming in, I've actually kind of got off track a little bit, but when somebody's coming in talking about coverages, somebody new, if I'm quoting their home, and let's say that they've got their dwelling, other structures, all those things, their personal liability may be at $100,000. Their medical payments may be at $1,000, which is the minimum. It is the least expensive thing to change on a policy, to go from $100,000 in personal liability and raise that up to the max of $500,000. Sometimes it's pennies a month.
Right.
And people just don't know this.
Is that on auto?
Yeah, this is on the homeowner's insurance. Yeah. So if you're looking at maybe your dwelling is $250,000, other structures is $25,000, but there's personal liability and then there's medical payments. And for some reason, a lot of agents just pre-populate $100,000 on the personal liability and pre-populate $1,000 on medical payments. Right. And it literally could be $10 a year to max those out. And why not
Exactly.
If we can, like I said, sometimes we feel like we're getting taken by insurance companies. I'm like, well, why not max out the benefit in case you ever need it?
Well, I've got a very close friend named Jim Desmond. He's with the Desmond Law Office here in town. He's a personal injury attorney. And we sit down all the time and we talk. He's got a podcast and website and videos and things like that where he talks a lot about different types of insurance. So we talk about personal injury protection, the no fault that Kentucky already has. We talk about uninsured, underinsured motorists. And years ago, he told me, look, Jim, pull out your policy, call your agent, and max out that UIM. I mean, and I almost doubled my coverage for, like you said, Wendy, I mean, pennies. And until you need it,
Yep.
That's fine. Save $1, but the day you need it and you didn't actually buy it, you're going to really, it's going to be a hard conversation to have. Yep. But things like that, and that's, you guys have been in this game so long that you're able to sit down and go, look, let me walk you through why. Instead of just hitting, like you said, most agents just hit it's 100 here, it's 100. Here's the standard policy. Let's get you through.
Yep.
These are the things that as an individual, as a business owner, you really want to take time during the year to really think about. And if it means, okay, look, I've either got to have lunch or I've got to have a meeting or something with my agent, bring them in and have those conversations. I mean, I really think, between my CPA, my insurance people, my financial people, I want to have very direct dialogue with them on an ongoing basis so that they can keep me apprised of what's changing in the market.
Yes.
But also what I may need to do, because everybody's got blind spots. We don't like to talk about it, but we've all got blind spots. And when it comes to insurance and things like that, there's a lot of things that you guys see happening, to other people, maybe other clients or other stories you hear in the industry that could be avoided if you just had that ongoing dialogue. And that's what I love about you guys.
I remember it was years ago, and I was working at a captive agency, and it was a young couple, and they had a little boy. And it was one of these things where you could tack on $50,000 in life insurance for $15 a month. And they said they couldn't afford it.
Right.
They couldn't afford it. They were trying to save on their monthly budget. And it wasn't even a month later that gentleman ended up in a car accident, and he was 22 years old, I think, and passed away.
Yeah.
And that one hit me hard. And it will still make me think, dang, maybe I should have done the sales thing and closed a little harder. And so where people don't take inventory of their insurance, or they don't think that they could afford an extra $15 or an extra $20 here, even on auto insurance, the Kentucky state minimum coverage on bodily injury and property damage is $25,000 per person, and then $50,000 per accident,
right.
And then $25,000 in property damage per accident. A lot of people do not know that you can take that and double the coverage, and depending on your situation, you can double it for maybe $20 extra a month.
Yeah.
Then, and a lot of people don't know this either, when you excuse me, let's say that you're with Progressive and you've got the minimum coverage. Well, let's say you take that up to the next step. When your renewal comes around, when I go to run some comparison quotes for you, insurance companies look more favorably upon you, and your premium will be better because you have higher limits and you're not just trying to make it
right.
on the minimum. Well, a lot of people don't know that.
A lot of people think $25,000. That seems like a lot of money. Not if you go to the ER, not if you have an anesthesiologist, a surgeon, the hospital bill, the private practitioner who comes in.
How many cars are worth $25,000 or more?
Right.
know, so if you hit a 2017 Toyota Camry, you're going to be, if you total that sucker, you are going to be in some money for that. Absolutely.
No, and that's the thing. You can be, penny wise, pound foolish. And I think insurance is one of those things where, again, it's the one thing we never want to use that we always have to pay for. So, yeah, you've got that. But you've got to get over the emotional side of it to say, look, financially, things are tough enough, especially if you own a business right now. If you've got a family right now, things are tough enough.
Yep.
You need to do these kind of things, and that's, you guys also do the personal policies. I know we're talking about, cars and some business stuff like that. But even on the personal policies, not having life insurance right now is such a mistake. I mentor some young guys, and I've got family members, and I sit down and tell them, look, you've got to make sure when your kids go off to college, okay, they are legally adults at that time. So I've got another attorney friend of mine, Scott Shanist, and he just wrote, the will and the healthcare directives and all that stuff for my son, because technically he's an adult, and without those documents in place, I mean, and I think that all, we're gonna have a really tough time should something ever happen to him. But then that comes back to life insurance as well. Kids think, well, I don't have any assets. I don't need to worry about it. No, there's always going to be something.
Yeah.
Are you guys doing a lot of personal policies for younger people now? I know typically that's one of the things that you think, well, maybe when I start having kids, maybe but it ought to come well before that.
It should. I mean, if you're younger, you lock in those rates.
Yeah.
You lock in your good, young, healthy rate as
Right.
opposed to an
I'll never die. Nothing will happen to
43-year-old
me.
rate on high blood pressure medication or whatever else it's going to be. You get to lock in your rate, and depending, Alan will know more about this, but depending on the product, you can switch those things over when they go to end. You can turn them into something else, correct?
Yeah. So, and we recently went through this with our own personal life insurance, believe it or not, where, I took my first policy out when I was like 23 years old. Well, back then, I had a, lot smaller house, one kid, things of that nature. Fast forward 20 years later, business owner, house, different kids, and I'm like, I need to update, my policy. And the rates were drastically different for a 43-year-old versus a 23-year-old.
People don't think about that. It's not just you. Well, I'm the same guy. It doesn't matter. You're older now. More things are going to happen.
Yeah, and I could have, looking back, hindsight being 2020, I wish I would have taken out way more coverage than I thought I would have needed at the time. Would have maybe seemed like overkill. But you gotta fast forward, to the future.
Well, let me ask you this: a lot of people look at there's whole life and there's term and things like that. You can also do a term that's convertible, right? I mean,
Yes.
so you want to talk about that transition?
Yes, absolutely. And, with that, and we always recommend, well, let me back up. Actually, when we're talking about life insurance, it really depends on the need and what it's for. So if somebody just needs $1 million term policy to cover a loan on a building, we're going to just do the cheapest possible term with an A-rated company that you can get and call it good.
And the purpose of that is to do what?
Just to so say if somebody, some loans require you to have life insurance on it in case, you buy the building, you pass away,
Right.
it repays the loan. Or if that liability for whatever reason flows to your spouse or heirs, it'll wipe that out. So a lot of people, use cheap term life insurance as a way to, make sure that debt gets paid, if they die. So
In fact, that's what I did on this property.
Absolutely,
I made
yeah.
sure that there's a policy out there that, hey, I don't want my kids probably will not continue this business. It's one of those things. I don't want to saddle them with that or saddle my estate with that debt. So here's a quick policy that really is not that expensive, that will satisfy that debt and leave them with an asset, that then they can choose what they want to do with later.
Absolutely, and so with that, when you talk about now that being said, then if it's a individual policy for somebody's doing more planning, hey, I want to make sure the mortgage is paid off, my kids have funds for college, things like that. For a few dollars, a month, you can add what's called an extended term conversion rider, where basically at the end of that term period, you can convert it to a whole life or a permanent policy if the need is there.
So if I take a term policy, and by term that means, hey, you're buying this for 10 years or 15 or 20
Yes.
or 30 years, and the prices vary depending on the term.
Yes.
But at the end of that term, typically those just go away, right?
Yes.
If you haven't passed, that was protection that you paid for. You didn't need it. Okay, it is what it is. But with this convertible rider that you talk about, that enables me to say, hey, look, I'm still now going to keep that policy, but I'm going to turn it into a different instrument.
That's correct. Okay. Yes. And what that does is, yes, it's going to be the rates of your new age, but it locks in your health. So if, usually 23-year-old you is going to be healthier than 43-year-old you,
Right.
or 43-year-old you is going to be healthier than 63-year-old
I had some bad habits in college.
Yes.
I don't know about that. I think I'm doing better now.
I mean,
but that's me.
as a general rule.
Fewer pizzas these days.
but I used to, and so, I used to be, my philosophy used to always be buy cheap term, invest the difference, et cetera. And that's not a bad strategy. I'm not knocking that strategy.
If you're disciplined enough to do it.
Yes, but I deal with Medicare age clients for a living, and it happens, I would say, almost on a monthly basis where somebody's at the end of that strategy of buy term and invest the difference. They couldn't retire as early as they wanted to. They didn't, the market didn't do those fake, illustrations that they use, and So then they're sitting here, they don't have enough money to retire on, and their insurance is going to expire, and we can't get them anything else.
Right.
So if they would have had that extended term conversion rider, we could at least, done something for them. Another thing is people's financial situations change, and there is an element of high level estate planning and things like that where a permanent life insurance instrument is key to have, and that's another conversation for another day. But so it's definitely not one size fits all. You have team term insurance, you have team whole life insurance. I'm team. Every client is going to be different. The client I talked to, before I got here is going to be different than the client I talked to at 2:00 this afternoon. And his needs, his wants, his desires, his, what his goals are in life is going to be completely different. So it's not fair for me as an insurance agent, or a life insurance, advisor, any of those roles that I try to fill, for me to project my views onto them. Now, there's some truths that are constant I need to, educate them on. But at the end of the day, the client drives the experience. And if they're dealing with me, we're going to make sure that client is covered properly.
Well, and again, that's the nice thing about having you as a broker, that you have a lot more to choose from and select from, because you're dealing with multiple carriers versus one carrier who says, hey, look, this is all I've got. And there's an old saying that says, if the only tool you have is a hammer, every problem starts to look like a nail.
Right.
And so, the advantage to you guys is you can kind of look at the entire situation and say, okay, let's take this individual and figure out what is best for their specific situation. And I don't know why you would do anything different, to be honest with you. Some people like going to the single line agent, the captive agent. I don't know. Hey, let me transition to this conversation, because we have a lot of business owners that listen to this podcast. Are there certain types of personal insurance or certain types of insurance that business owners need to think about? And I know you guys aren't doing a lot of business, insure the property and all this stuff. But, like for me, I went out and said, look, I want a policy on myself. Should something happen to me, it pays off my business loan. It pays off my property loan here. Can you walk us through some things that a business owner, entrepreneur might want to be thinking about?
Yeah, absolutely. Obviously, health insurance, as individually. And, another big thing that I see business owners grossly underinsured in is disability insurance. Right. And proper disability insurance, where you got to think about it, Jim. I mean, if you think about what you make in a year and times that by 10, 20, or 30, that can be a big number for some business owners,
right.
Especially, professional, attorneys, doctors, and whatever. So you add that up, that's really your biggest asset, is your ability to produce that income.
Yeah.
So if something happens and you're temporarily disabled or permanently disabled, then that faucet turns off. So you have to protect that.
Right. And Social Security is not as lucrative as you might hope.
Yeah. No. And I think about that all the time. I mean, I don't know, you may remember, Jim, a couple of years ago when I got hit by those 3 semis on 71, and thankfully I walked away from it, unscathed. But if I wouldn't have, what would that have looked like for my family?
Exactly.
How would they have, that income stream, for the kids' college, for the cars, for all that would have been dried up,
Exactly.
So if that was the end of my days, I was properly protected life insurance wise, but honestly, I was not disability wise. And that was a catalyst for me to really, start having honest conversations with A, myself, and B, my clients.
Well, and I think that's a gap that a lot of us are looking at right now, that wow, we hadn't really considered that. I got life insurance, but I don't have disability, because either way, I'm probably not producing the income I am today, and I need to factor that in. For a lot of young professionals, for a lot of regular professionals who are just out there kind of on their own, like myself, I don't have employees. If I stop working, my cash flow basically stops. For a lot of us, I think that's the truth. And these disabilities, they're short and long-term disabilities. Do you help with those lines of insurance? Is that an area that you're in?
Yes, we do. I do on the more long-term than short-term.
What's the break off there? When do you decide this is a long-term issue versus a short-term? Is it a calendar?
Yeah, so short-term would typically be 6 months or less.
Okay.
And we can do those, but here's what happens with those. Some boring insurance tidbits is, so they're really hard to get placed, because a lot of times people that are trying to get a short-term disability standalone policy, not through an employer, they have an upcoming event that they think they're going to need it for.
Sure.
So, and that's an underwriting question. So it it gets excluded. You know what I mean? So it doesn't do them any good. So
I know I'm going to have this giant surgery, and
or I'm going to get pregnant, or I'm going to whatever, and it just doesn't. So we can do them, but I typically recommend getting that through your employer, unless you're a business owner and you can't get it. Then we can talk about kind of self-insuring for those short 3 to 6 month type things, but long term is your biggest risk. I mean, and that's where. Several years up to age 65 even. Some policies go all the way up to age 65. And you can set them up individually. You can set them up to replace business income even. So if you're a dentist and you own a practice and your income is gone and it depends on you operating that practice to fund it, it'll replace those funds as well. So there's a lot of different strategies to that. But a lot of people either don't know or they don't think it's important until it's important.
Well, I know for a lot of small business owners, I mean, we're looking at the cash flow constantly.
Yeah.
That's one more premium that I got to account for somewhere. But again, this whole house falls in on itself if you don't have the financial wherewithal in terms of the proper coverages. And those are the things that I hope a lot of people listening to this podcast are going to think about, or at least begin thinking about. And sometimes we don't know where to begin, where to start that conversation. You can miss some things if you just do it by yourself, and it's a good idea to bring in, again, some advisors like you guys. Alan, what's the best way for people to get a hold of you?
They can reach the office, 502-345-9440, or our website, alanhallagency.com, and that's ALANHALL agency.com.
Perfect. Friends, I hope you've found this information helpful. Obviously, it's the tip of the iceberg. I mean, there's a lot more to this, but in 30 minutes, there's only so much you can really get into. And but it's some things that you need to think about. And whether it's a personal line, whether it's looking at your auto insurance, whether it's looking at long-term disability coverage, these are all things that Alan and Wendy can help you with. And I encourage you. I've known these guys for years. I mean, they're friends of mine. We have a lot of fun, and maybe at some point we'll come back and talk about Alan's abilities in the kitchen. He's actually quite the chef, and if you like him on Facebook, you might get a picture of some of the dishes he's preparing these days. But we'll get into that one later. But if you do call him, ask him about that stuff. He might have a recipe of the month for you or something. But guys, I hope you found this helpful. If you have any questions whatsoever, I've known these guys for a long time, as I said before, and I'd be very comfortable saying, you know what, give them a call. They know what they're doing. They have options they can walk you through. And again, if you haven't started this conversation yet, this might be a good time to do it. So again, Wendy, Alan, I know you guys are busy. I really appreciate your time.
Thank you.
And if there's ever anything I can do for you on this side, just let me know. But hey, friends, that's about it. I appreciate you listening, and we'll be back again soon. Take care. Bye-bye.